The system is about to blow. Bitcoin to 1 million to force stablecoins to buy US bonds is the only way out. Bitcoin saves the dollar. So this obviously is something we've talked about a lot, is that stablecoins are now strategically valuable to the United States of America. There is no ifs, ands, or buts about it, especially after the Genius Act. What have we been talking about? We say stablecoins are the ace in the hand for the United States because every single stablecoin minted is a US Treasury buyer. What's the best way to grow stablecoins is to grow Bitcoin, and vice versa. When stablecoins grow, Bitcoin grows. When Bitcoin grows, stablecoins grow. They are the most liquid trading pair in the future world reserve currency. Period.
As September crash fears grow, Bitcoin and crypto holders are bracing for another leg down. As the Fed grapples with inflation and interest rates, investors remain skeptical after Federal Reserve Chairman Jerome Powell seemed less than optimistic, as he believes that it could be some time before we see inflation being lowered and expects prices to continue to rise. Now in September, we are joined by Jack Mallers, who shares his insights into the price action and market dynamics for Bitcoin and why he's bullish in 2025. As the CEO of Strike, Jack Mallers says Bitcoin represents 1% of the world's wealth. After BlackRock emerged as one of the primary players with its iShares Bitcoin ETF, Mallers knew it was heading straight to $1 million per coin. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness Bitcoin's price cross another all-time high, which will mark another historic milestone for the Bitcoin community. He believes Bitcoin has crossed the threshold into permanence and serves as the gateway for substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Let's get right into the latest interview with Jack Mallers, as he gives his outlook and price prediction for Bitcoin and where we're headed in 2025.
Before the emergence of stablecoins, the US Federal Reserve and the US Treasury Department always bailed out Eurodollar banking institutions when they got into trouble. A well-functioning Eurodollar market was essential to the health of the empire. But now, there is a new tool that allows Besant to soak up those flows. At the macro level, Besant must provide a reason for Eurodollar deposits to shift on-chain. Just a short history lesson, guys. Eurodollar is the market that was created by Russia post-World War II. Very long story short, they needed a way to hold dollar positions in banks. They couldn't onshore with the United States. The US could have shut it off and stopped it. They didn't for a lot of political reasons. So it ended up becoming a massive market. It's known as the Eurodollar market. It's dollars outside of the United States. For example, during the 2008 global financial crisis, the Fed secretly lent billions of dollars to foreign banks who were short dollars because of the knock-on effects of the collapse of subprime mortgages and their associated derivatives. As a result, Eurodollar depositors believe that the US government implicitly guarantees their money, even though technically they are outside of the US regulated financial system. So there is an implicit backing that the US will help the Eurodollar market if they get in trouble because of 2008. Declaring that non-US bank branches will not receive any help from the Fed or Treasury should another financial crisis occur will redirect Eurodollar deposits into the loving hands of stablecoin issuers. If you think that this is far-fetched, a strategist from Deutsche Bank wrote a piece openly questioning whether the US would weaponize dollar swap lines to force the Europeans to do what the Trump administration requires of them. So the US can use and leverage the fact that this market has relied on bailouts and say, hey, you're swimming on your own. Now their depositors would go leave and go swim where there is backing, where there is protection. That is the threat. Without the guarantee, Eurodollar depositors would act in their own best interest by moving funds into dollar-pegged stablecoins like Tether. Tether holds all of its assets as US bank deposits and/or T-bills. By law, the US government guarantees all deposits held to the right of too big to fail banks post-2023 regional banking crisis, and the Fed Treasury effectively guarantee all deposits at any US bank or branch. The default risk of T-bills is nothing as well because the US government will never voluntarily go bankrupt. and they can always print the money to pay T-bill interest. Therefore, stablecoin deposits are risk-free in nominal dollar terms, but now Eurodollar deposits are not. Quickly, dollar-pegged stablecoin issuers will face an influx of $10 to $13 trillion. That is the size of the Eurodollar market. Stablecoins become the marginal lender to the U.S. government. Even if Fed Chairperson Powell continues to obstruct Trump's monetary agenda by refusing to cut rates, end quantitative tightening, and restore quantitative easing, Bessent can offer T-bills at a lower rate than the Fed funds. He could do this because stablecoin issuers must buy whatever he sells them. If my thesis is correct and stablecoins are a part of the piece of Pax Americana's monetary policy to expand the use of the dollar, the empire will protect the U.S. tech giants from local regulation reprisals as they provide dollar banking services to the plebs, is what he calls. He's talking about the global south. And there's nothing any of these governments can do about it. Assuming I have this all right, what is the TAM, which is the target audience, total addressable market, of potential stablecoin deposits from the global south? The most advanced block of countries in the global south are the BRICS nations. Let's exclude China because they've banned all Western internet companies and social media companies, very hard to serve products to them. The question is, what's the best estimate of local currency bank deposits? The numbers bonded about in my models are massive. This is a once-in-a-century change of global monetary architecture. Most of us will never witness such an event again in our investing careers. If I am right, we will see some of this news in the headlines. And I zoom in here. Here's what he thinks we'll see. The need for oversight of the offshore USD market, aka Eurodollar. So the prediction is this. If the US is going to use stablecoins and Bitcoin as a liquidity sponge, as a way to find marginal lenders to the United States, which we've been talking about, and I know I sound crazy, guys, but I promise you I'm not.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, leads the charge in obtaining regulatory approval for Bitcoin ETFs. Moves like this, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
First, we'll see that they need oversight over the offshore market. Right now, there is no oversight. You'll start to see some headlines tying the use of central bank dollar swap lines with the Fed and/or Treasury to opening up certain aspects of digital markets to U.S. tech firms. Next, regulations put forward to require stablecoin issuers to hold dollars in a U.S. bank branch and/or T-bills. Encouragement of stablecoin issuers to list on the U.S. stock market. We saw Circle do that. U.S. big tech firms adding crypto wallets to their social media apps. We've seen Stripe. We've seen SoFi. We're starting to see big tech integrate stable coins. Keep an eye on this. General positive statements by members of the Trump administration about stablecoins. Okay, so what the United States wants to do is get them lending to the government. How do they do that? Stable coins. I'm telling you guys, Bitcoin and stable coins are the liquidity sponge. They're the best expression of currency debasement. They're going to soak up all the printing. They're going to soak up all the liquidity. Bitcoin's going to 250 to a million this cycle. That is still my prediction. I don't let the dumps phase me. You can't phase me. Okay? Now, let's go on. Go big or go home. Buffalo Bill Bessent has a choice. Go big or go Democrat. Does he want Team Red to triumph in the 2026 midterm and, most importantly, the 2028 presidential elections? I believe he does. And if that is the case, the only path to victory is to finance Trump's ability to provide more free shit to the plebs. Therefore, Bessent needs to find a price-insensitive buyer of U.S. debt. Obviously, he believes stablecoins are part of the solution given public statements of support for this technology, but he needs to go all the way. If the Eurodollars and deposits of the global south and Europeans don't flow into stablecoins, he must Bismarck them with his star-studded member. It puts the dollar on its skin or it gets the sanctions again. 10 to 13 trillion in the Eurodollar market, $21 trillion of currency deposits in the global south. That puts a target for stablecoins at around $34 trillion. If we get even a fraction of that, Bitcoin soars. Bitcoin absolutely soars. So this is a very good article. Highly recommend reading it. It is a practical deep dive into the thesis we've been talking about on this show. Now, I'm not just going to pitch you some crazy idea and say, believe me, bro. The point of walking you guys through all of that, and I know it was dense, is to show you that the headlines that Arthur started to predict have already started to come out, okay? We've covered these headlines on the show. So the US would start weaponizing swap lines. Well, this is from the Financial Times. Central banks are beginning to fret about dollar swap lines. This is absolutely real. Trump is doing this. From The Guardian, Trump threatens tariffs on countries that discriminate against US tech. What's the only way that we can get stable coins to proliferate in a way that the US needs them to? Well, if WhatsApp, if Instagram, if all Facebook's products, if Twitter, Elon, if these guys who already have hundreds of millions, if not billions users all over the world, if they implement stablecoins and are able to proliferate and extend into the global south, the US is going to get its way. So Trump says, let these companies do what they want. So that is already happening. Lagarde's Euro moment busted by dollar-linked stablecoins. Current and former PBOC heads disagree on stablecoin hype. So now at the European Central Bank, with the PBOC, the Public Bank of China, there's a massive emergency meetings and threats about stablecoins. Stablecoins are the ace in the US government's hand. Now, sometimes people say, bro, you're a stablecoin maxi. No, the fuck I'm not. Fuck you. I own 0 stablecoins. I own $0. I'm a Bitcoin maxi. The point of this show is to make sense of the world that we're living in. Okay? I've talked about this. The simplest strategy, and one I highly recommend and oftentimes deploy for myself, is I go to the beach, I buy Bitcoin, I stay humble.
Jack Mallers challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Mallers also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Jack Mallers underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Jack Mallers? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?